Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Larsen and Toubro, a very interesting large cap capital goods company. Let's understand where it is headed and whether you should invest in the company or not. So, let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I start with Lars and Tubro, here's a small request that kindly support me through Patreon. Once you do that, it will help me grow the channel. It will help you also ask me questions in details. And when you take the $10 Patreon membership, you'll have access to my portfolio, my watch list, and anything that I do with stocks. It will come on Patreon straight away. And whether I like a share or not, or whether I like a company or not, and I'm researching something, I'll put it on Patreon. So take that $10 membership, and you'll get a lot. For detailed market or company talk, kindly contact me directly on email and we can work something out. Now about the company, Larsen & Toubro was established in 1938, so it is a quite an old company and quite established company, and many of you are holding the share. Probably 50% of you might be having the shares from your parents as well, who would be having legacy of buying top quality shares, because these were regarded one of marquee shares with a lot of dividend, etc., and was darling of the 2007-8 bull run from 2003 to 2007-8. This company rose appreciably. Largest capital goods manufacturer in India, and strong management and market leader in its space. So there's no question about the management, its pedigree, etc. Plus, it is the market leader in the capital goods space, and then other companies come in. So even when we have a situation where the capital goods industry is going through a lot of trouble, the capital goods industry is going through a turmoil, and there is very less government expenditure that is taking place on infrastructure and on expansion. Yet large players, large mutual funds, fund houses, etc., and even individual, you can say HNIs, etc., are holding on to Larsen Toubro, because any movement in the infrastructure front will have L&T double triple from these levels, and that is why they are holding on to, because in other companies there are issues of management quality, integrity, as well as balance sheet. But here we have, although we have little bit of issues with debt, etc., but not a lot, and these and the company itself is able to manage the things, and were able to manage the things in the 2008-9 crisis, and has been doing since the economy has been under pressure from 2011-12. So I have not seen over the last you can say 7-8 years or even 9 years that infrastructure and capital goods pick up, although there have been a lot of talk, yet this industry has not picked up. But the stock has performed reasonably fine, apart from the last 3-4 months where it has fallen a lot. So it is serving the leading clients at the moment. They have a lot of projects at hand, and the market cap of the company is around 1.3 lakh crores. If you look at the financials of the company, then sales were a little bit up, and this is what is regarded as pretty good. So this is financials, and this is the March quarter numbers which have just come in. So sales were up by 2.5%, which is reasonably fine considering the kind of environment we are in with respect to the infrastructure space. But you see, the profit has fallen by around 14%, and the profit has been shrinking over the last 8-10 quarters. And this has been a cause for concern for all investors, and a cause for concerns for those people who are believing in the India story, who are believing that the India growth story can continue and infrastructure may come back. Debt has increased, and has increased to a reasonable level over the last 4-5 years. So by slowly and by incremental amounts, debt has kept on increasing, and that has also led to a lot of pressure on the profit and loss account, on the net profit numbers. But there's high institutional investments, there's high promoter holding, etc., and So this gives a lot of confidence for people, and everybody is waiting for, whoever is invested into this company is waiting for that push, that infrastructure push that may come this year, next year, and the stock may perform really well. Return on equity at 14.5% in such an environment is appreciable. Net profit margin at 17% is very good, because normally net profit margin is in the lower single digit or higher single digits or lower double digits. It is at 17%. It is one of the best in the industry at the moment. If you look at the performance of the company, so have been subdued for many quarters. As I mentioned, for 8, 10, 12 quarters, it had gone up. So it does go up in a spurt over a few days and then come back to the same prices. And that is what not really what investors want. Investors want consistent returns year on year, like we have in the large consumer names, and they don't get it here in the capital goods space. Had doubled in 3.5 years till April 2019. So over 2015, you can say, till 2019, or 2016 February till 2019, or something like that. Second half of 2015 till the mid of 2019, it had doubled. But again, doubling in 3.5 years, okay, that's fine, given good returns. But from April 2019, the stock has been relentlessly falling, and it has fallen more than 60% at the lows, when the market fell in March, and the stock really fell badly. I think below 700 or something like that. So it has been falling relentlessly, and eventually what you get is nothing out of it over a 5.5 year period, and that is what is more frustrating for investors at the moment. Numbers have remained muted. It has not been great, but this is because of the kind of economic turmoil that India is going through over the last 5 6 years at least, probably 8 to 9 years, with respect to the capital goods industries. And most importantly, future prospects of the next couple of years look bleak. So markets are always future looking, but here what we see and what the market sees is no growth whatsoever going forward, at least for the next 18 months. And even though there is growth expected in the consumer discretionary, but in infrastructure and capital goods space, there's still no light at the end of the tunnel, especially with the kind of pandemic that we are going through. There is very little construction activity that is going on, and it seems like next couple of years could be extremely difficult, and that's why people are not getting into such a space. So if we count the reasons for the decline, economic slump from FY18 onwards. So what has happened is, between 2011 to 18, we had shrinkage of the economy, and there have been spurt of the economic growth. So in 2016 we had a spurt. In FY17 we did reasonably well, and the stock performed in FY17 and 18. But then after FY18, from the middle of 2018 till now, things have always looked downwards, and that has not helped the company any bit. Slowing down of demand and investment from government, as I mentioned, that many projects are being stalled, and it had stalled earlier. So they have stalled, 6 months before this pandemic hit, and after the pandemic there's no hope whatsoever, at least for the next 6 8 months, at least for the next 2 to 3 quarters. I see no more growth with respect to the projects, or more projects getting approval, etc., and getting started. Because see, this company, or the business is of a higher gestation period, so you have to understand that the profits come in extremely late. So, as I mentioned, that this business itself is of a high gestation period, and what that means is that the profits come in extremely late. So what happens is, once you get the project, it takes around 3 to 4 years for completing the project, and then probably these are government projects more or less. So you get the money from the government, and it takes another year, year and a half. So you take for granted that it takes around 5 to 6 years for getting a profit of a particular project of thousand, say 5,000 crore project. and eventually there's a margin of, you can say, 20% or something, then 1,000 crores of that amount would only be credited to the profit and loss account, say 4 5 years down the line. So that's why they have a lot of projects at hand. That's why there are a lot of projects in the pipeline, but the main issue is in execution and finally getting the profit in. And that is what the people do not like. That is what I don't like as an investor. I want continuous profits churning companies, which make profits on a cash basis, on a quarterly basis, and continuously making profits on the bottom line. But here what you get is profits on a 4 5 year basis rather than a 4 5 weeks basis. So you look into a Britannia or a Asian Paints or a HUL, etc. They do businesses in cash, and that's why there is so high, you can say, PE for these companies like a DMart, etc. Slowing down of demand and investment from the government was another reason, as I mentioned. A rising debt and bleak future outlook. So debt has increased, and people are staying away from companies which are of high debt, although they can easily service the debt. Everybody understands, but companies with lower debt or no debt are making a lot of profits on the bottom line, and that is what is essential when you are investing into any company. So that has also led to the fact that many investors have stayed away from Larsen and Toubro. Again, low cash, high on credit, a business with high gestation period, with an operating cycle of 4 years, 4 5 years, as I mentioned, and the next 2 years look extremely bleak. These are the reasons for the stock to remain down at the moment. So stock did fall because of the pandemic, because of the slowing down of economy, because of what has been happening around with respect to infrastructure capital goods, but it has remained down and nobody is willing to get into the stock because the future outlook looks bleak, and next 2 years it looks like that things cannot improve. So if you look at the technicals of the company, 800 looks like a massive support, so 10 11% down from these levels, a very good levels to add if you have a good 7 8 year time frame. If 800 goes, then we are looking at 660 levels. I cannot rule that out, even with a little bit of you can say gyration in the Nifty. If the Nifty goes to 8,000 or something, even down by 20 22%, this stock can easily go to 600 650. The 200 DMA is still far off at 1200 rupees. So this tells you that how weak it is on charts, the stock itself, and that's why I would not like to get into such a stock for even trading into a stock for a few months. May see a consolidation between this 850 900 band. Buy, in my opinion, if you want to buy on a technical basis, then only buy above 1050 levels whenever that comes in, and probably look for a target of 1200 1280 on the stock. So what needs to be done? I would avoid even for long term because of the reasons I've just mentioned. I think the business itself has a long operating cycle, long you can say gestation period to get the profits in, and that's why I will avoid. Always keep track of the numbers. Whenever things look like changing, you can trade into the stock for a year and a half, get in, get out, and probably cutely trade into it, but not invest into it. That is what my personal belief is. Better to look at pure consumption plays that are even good, so cash rich businesses which make profits on cash basis. Yes, it is one of the best in this business, in this field of capital goods, but capital goods industry is facing a lot of trouble, and always have less than 5% of exposure in such a stock. So this was my video on Larsen & Toubro. Please like and subscribe my channel and hit the bell icon so that you can get my video straight away when I post it. Thanks a lot for watching.